Jarrad Brown, financial planner to Australian expats in Singapore and around the world. Welcome to my video series where we cover the personal finance basics for Australians at home and abroad. Today, I'm thrilled to have with me Managing Director of CS2 Tax, Boon. Boon provides both personal and corporate income tax to our clients both in Singapore and Australia. It's been an incredible resource for our clients, and I'm thrilled to have him with us here today to cover some of the common questions that our Australian expat clients face.
Thanks for having me, Jarrad.
Thank you for joining us. So Ben, can you tell us a little bit about the income tax deductions available here? What can I as an individual claim or look to reduce my taxable income with?
That's a good question. As you and I both know, in Australia, if you incur an expense for work purposes, it's generally deductible. So we're used to things like car expenses, telephone, mobile bills. In Singapore, because it's such a simplified system and the rate of tax is low, the deductions are actually limited for an employee. And quite often, the tax authorities take a view that if you're incurring an expense for work purposes, your employer should actually be reimbursing you, so we're not going to give you a deduction. Having said that, your tax liability can be reduced with things called rebates and offsets. And some common ones that are applicable to expats are your spouse rebate. So if you have a spouse who is non-working in Singapore, so someone on a dependent pass, for example, and as long as they're not earning more than $4,000 from worldwide sources, you can claim a rebate of $2,000. So a rebate will basically reduce your taxable income. Okay. In addition to that, another common one is the child rebate. So each child aged below the age of 16, you can claim a $4,000 rebate. Now the key or the interesting part here is that your child can be, by birth, could be a stepchild, could be someone adopted, okay? And they don't need to actually be physically living in Singapore. So often you'll have families who mum and dad move up to Singapore to work, but the one or two children remain in Australia at boarding school. Just because they're there, you're still eligible to claim 2 lots of the $4,000 rebate for each child. Another interesting one that a lot of people aren't aware of is life insurance. So in Australia, we can't claim life insurance policy deductions against our taxable income. In Singapore, you can actually claim either the actual premium amount or $5,000, whichever is less. The only key requirement there is that your insurance underwriter, providing you the life insurance cover, must have some presence in Singapore. So if you think about some of the global insurance companies, think about whether they have a presence here in Singapore and are selling life insurance here in Singapore. If that's the case with your policy, you're able to claim the premium and reduce your taxable income. Now again, it doesn't need to be a Singapore-based premium. So you can have a premium in Australia, in Australia where you're paying the premium from Australia, you can still make that deduction here in Singapore.
Okay, great. So when people are actually looking at their life insurance, their personal protection, not only should they be looking at are they actually covered offshore, but also looking at is it actually tax deductible?
Absolutely, yeah.
Okay,
Definitely.